Welcome, everyone, to this week's community call. We hold these calls every Tuesday at 9 a.m. Eastern, 1 p.m. UTC. On the agenda for today's call, I have some governance and forum proposals to go over and review. We'll go over a live snapshot vote. I'll give an update on the wNXM buyback with LDO. I'll do a review of the Treasury and then go over some current forum proposals that are actively being discussed by members. We'll go through some of the updates. I'll do the week in review of cover sales. I'll share active coverage by cover type. I'll give an update on custodial yield products, and then we'll transition things to an open forum. But to get started, I will do a brief overview of the governance and forum proposals that are currently active. The first one is a live snapshot vote. So Vincent previously put up a discussion to talk about allocating the mutual's safe holdings to buy back wNXM. So this discussion was live on the forum for about a week or so. Members talked back and forth about, the best use case for safe. Worth noting that the safe token itself is not yet transferable. The mutual has some safe allocation. You can look in the Nexus financial section of the docs and look at the multi-sigs. In total, the amount of safe that has been claimed, and once the safe token does become transferable, will be available in the Treasury is 71,079 safe, roughly. So this proposal is regarding what we want to do with with our safe holdings. So Vincent has outlined a proposal saying that we could use 50% of safe to sell and buy wNXM at a certain price, and the other 50% once it hits a different price target. You can review that discussion on the forum, but this snapshot vote is live. The forum post is also linked in that vote. This is open for voting until Thursday, the 20th of October, and voting closes at 1 p.m. Eastern, 5 p.m. UTC. Choices are pretty simple for this one. It's yes, do we want to buy back wNXM using the safe holdings, as outlined in the proposal, or no, do we not want to buy back wNXM with the safe holdings as it's outlined in the proposal? So on this, members can participate by commenting and reviewing on the forum. You can offer feedback on any areas of focus that Vincent's talked about, which is essentially going to be the price points that he's proposing to sell safe at. And then, of course, review and vote on the snapshot proposal while it's open. Currently, the leading outcome is to use our safe holdings to buy back wNXM. But that link is also in the call for today's community calls. We'll share that in our weekly newsletter. And I put an announcement about that yesterday, just to let people know that that's still active. I wanted to give a brief update on the wNXM buyback with LDO holdings. So there was previously another proposal put up by Vincent on the forum about using some of the assets in the Nexus Treasury to buy back wNXM while it's still trading below book value. The LDO holdings in the Treasury, which is a little bit more than 107,000 LDO, was used to buy back wNXM. LDO was sold and roughly 8,500 wNXM were purchased. The current market value as of this morning of those assets is about $138,200. The book value of these assets is around 192.71 ETH or 255.7K worth of assets. Another successful buyback. I gave an update last week about the ETHW sale and the subsequent buyback. So we've added a decent amount of wNXM to the Treasury now. I think we're close to somewhere between 60 or 65,000 wNXM that's been added to Treasury holdings. That is a really great outcome. Keep an eye out for updates on some of these things. I'll give an update next week on the outcome of Vincent's proposal as well on the safe holdings. And then I wanted to just do an overview of the state of the Nexus Treasury. We have a couple proposals on the forum that are talking about reducing Treasury spending. So to give people insight on what our actual holdings are in the Treasury, I thought I would just go over some of the assets that are held in the Nexus Treasury multi-sig. It's worth noting, while we have 604,293 total NXM between wNXM and NXM holdings in the Treasury multi-sig, that not all of that is actually owned by the Treasury. So the NXM and wNXM reserved for existing activities. This would be NXM that was voted to be allocated in the following ways: is foundation funding, for staking within the mutual, and for using some NXM to potentially do some research and then figure out how we can use that amount to incentivize long-term aligned members or a long-term aligned group. So that was discussed previously on the forum. Members signaled their support for how the wNXM from the buyback that was conducted in December 2021 should be used. That's where the NXM and wNXM reserved for existing activities, that's where that comes from. You can find that info on the forum and on Snapshot as well. I'm happy to connect anybody with those links if they'd like to review that, but there's also links on the forum to these things in some of our recent Treasury proposals. So if we're looking at the Treasury-owned wNXM, there's 222,523.44 wNXM currently in the Treasury wallet. The value of this is about 3.6 million. At book value, it's worth about 6.7 million. Again, that's based on today's prices. The liabilities that we currently have, which are one of the leading things here, the 550,000, that's reserved for the ImmuneFi matching bug bounty program. It's one of the things that's up for discussion. We have the bootnode grant funding for the Covered Vaults project, which is allocated, and then some NXM that's reserved for a Nexus V2 Dune project. So less our liabilities, the total USD value of the Treasury-owned assets is about $3 million, or 2.98 million to be a little bit more exact. And the net Treasury value at book is about 5.53 million. So giving some insight here as to what we have in the Treasury. I'll include this update in our newsletter as well. But this kind of informs the discussions that are being had on the forum currently. One of those discussions is about the DDoB smart contract monitoring service. This is up for review because this has been active for over a year. It's time for members to review this partnership and this expenditure. So in May of 2021, members have voted to work with DDoB to monitor select smart contract systems for vulnerabilities to mitigate any potential claimable events. The list of the monitored protocols is on the forum. Neville from DDoB has also responded with a couple reports talking about some of the vulnerabilities that their watchdog system had detected. And with this, Neville kind of outlines DDoB's perspective on how we can further work together. But looking at the cost, which again is outlined on the forum, cost to date has been 10,102.79 wNXM. The cost for the service is about 20,000 a month, or 240,000 a year. I've outlined, the amount of wNXM that represents at recent prices. I've also outlined that on the forum. On a monthly basis, it's about 0.65% of our Treasury holdings, and on a yearly basis, it's about 7.76% of our Treasury holdings. So because we have this in the ImmuneFi bug bounty partnership, these are rather large expenditures from the Treasury, and it's important for everyone to review this, discuss this, and then determine an outcome that we can put up for Snapshot vote. So there's been some initial discussion. If consensus is reached, then these proposals will be transitioned to Snapshot on Monday, the 24th of October. Again, going on what Neville has responded to a couple questions on the forum. If we were to continue, they propose that we could optimize for riskier protocols and revise the current list of monitored protocols, that they could help us create metrics for actuarial work that we do when assessing risk, and then that we could further market this collaboration and how we're working together to try and detect vulnerabilities before they can be exploited. Neville has also offered that we could figure out an arrangement where if Treasury holdings drop by a certain percentage in value, that DDoB could waive the fee for their service until the market levels out as well. So definitely worth reviewing this. This is in the thread for today's call as well. Highly recommend everybody review this and share their thoughts on how we should continue this, or if we should revise spending or eliminate this spending for the time being. That is active on the forum. Another one is the ImmuneFi Matching Bug Bounty Program. This is another one that's up for review. It's been active for over a year, and it's time for members to review this partnership. So we have an active partnership where if there is a certain amount of liabilities, we will offer a matching bug bounty. This started in August of 2021. Members approved to start this program. Once funding from an initial program was depleted, then in April 2022, members approved an expansion and renewal of the program. So the initial proposal was for about $200,000 in matching funds, and the renewal was for $600,000 in matching funds. To date, we have incentivized 2 critical vulnerability disclosures. One was for Yearn earlier this year. We announced that in March that we provided a $200,000 matching bounty, which doubled the size of the bug bounty, and prevented a critical vulnerability from being exploited on Yearn Finance. And then there was another one more recently in July for synthetics. Critical vulnerability was disclosed, and we provided $50,000 in matching for that bug bounty. We have paid out a couple to date, but looking at the cost to date of this, it's 8,834 wNXM to date in terms of cost. And the projected cost is, again, $550,000 or 32,797 wNXM based on recent prices. This is another one. Mitchell from ImmuneFi has commented on the forum and has shared some of his thoughts about the benefit of the program, but also some considerations about our current Treasury holdings. Highly recommend everybody reviews this as well. Just like the previous one, this will transition to a snapshot vote on Monday, the 24th of October, if we can achieve consensus ahead of time and put this up for vote to review these Treasury expenditures. So both of these are very important. I hope that everyone does take the time to review these and share their thoughts. But at this point in the call, I will hand things over to Hugh to give his weekly team update.
All right, so yeah, a couple of things going on at the moment where Bootnode have joined us, ramping up the testing, which is great. They're kind of onboarded and getting into the full swing of things now. Just working through, I guess, a few minor edge cases on the staking and when claims happen and various things. So the team's actually, a lot of the devs are co-located in Bucharest this week, so or have been last week and stuff. So that's been going quite well on the V2 side of things. Continues to progress quite well. With I guess on other aspects, so tokenomics. Ray and I had a big workshop going through some of the extra detail on the kind of strawman design. Just working out we kind of got 90% of the way there first, and then had to figure out a few other extra pieces about how the capital gets back into the mutual, etc., and when that happens and how that might happen. So we've got a really good strawman. Ray's kind of writing it all up at the moment, and is adjusting his kind of Python model from a simulation point of view. And then I think his aim is to share it hopefully later this week or next week with the community for further discussion. So he's just kind of getting the documentation in order so that it's in a spot that's reasonable to present to people so they can understand what's going on. But yeah, it's I'm quite happy and excited with how it's progressing, and I think the current strawman addresses all the major goals and objectives that we have, but also that we've picked up over the years from members. So I think that's going quite well as well. We've also, I guess, on the developer side, we've also kind of put out another job offer to someone, and they've accepted. So they're going to be starting in a few weeks. So that's exciting, expanding the engineering team. So I think it's all's going well on that side. One more thing, it's just slipping my mind. So the keen-eyed among you will see that there's another staking listing that went up late last night for Sherlock. So have a look at that and stake on it if you wish. This is I think Brave's going to put out some more comms on this over the coming weeks, but there's an excess coverage for Sherlock, so we're going to be looking to cover some of their excess risk so that they can write more business on the front end. So it's kind of like a reinsurance arrangement to the Sherlock protocol, though it's not insurance. It's excess coverage. So that's pretty exciting. So I guess keep your eyes peeled for that one. And you can have a look at the cover wording and snake if you wish. So there's that going on as well. We're also looking. Also got more clients on the staking and the slashing coverage side that are kind of just going through the final bits and pieces. Probably takes a few more weeks to kind of work through it, but that's going along quite well, and we've got a kind of agreement on there. So got another decent sized client coming through on the slashing risk coverage as well. So lots of things going on, and all pretty positive. Happy to take questions on any of that.
Yeah, thanks Hugh for that great update. Definitely looking forward to announcing some of these things and putting out some comms once things are in order. I will move on to the review of cover sales, but if anybody does have any questions, just feel free to interrupt me and ask those as I go through this next section. The last week in cover sales, all of this is sourced from the Nexus tracker. You can find that in the thread for today's call as well. Looking at the last week, we sold about $30.3 million in cover, and the mutual earned $83,847 in fees from cover sales. Looking at the split between DAI denomination and ETH denomination, it's a roughly 88% DAI denominated for cover sold and about 71% for fees earned in DAI. And on the other side, about 12% in ETH and 29% in ETH denomination. But the largest cover buys that we saw come through were for Curve and Convex. The recent listing of GMX, we've seen a lot of demand for cover for GMX, so some pretty sizable cover buys coming through, and that one holds the second place for fees earned in the last week. And we saw some large cover buys for FTX and Euler as well, and then some cover buys trickling in for wNXM and Crypto.com. We shared that there's been a notable increase in cover sales in the last 3 weeks, so we've just been seeing consistent growth here over the last several weeks in cover buys, whether it's single day cover buys or cover buys over the period of a week. Last week we sold about $22 million in cover. The week before that, I think it was something much smaller, maybe around $4 million in covers. So we're just seeing consistent growth. So hopefully things are picking up in the market and people are finding new opportunities and they're using the mutual to protect their assets as they're active within DeFi. So looking forward to sharing the numbers next week. Hopefully we can get a little bit higher than where we're at this week. In this section, I'll review the active coverage by cover type. Just to note that in our newsletter every week, we break it down by protocol cover, custody cover, all the different cover types. But here we just give an overview of the total coverage for the week in one nice, neat chart. So if we look at our total active cover as of the 17th, for protocol cover, we have 164.5 million in active coverage, 25.4 million in active coverage for custody cover, 7.1 million for ETH2 staking cover, and 1.3 million for yield token cover. Some of the larger active coverage, active covers for protocol cover are still the Convex, Curve, Aave. But all of this information you can see right in the Nexus tracker as well. It breaks it down by the platform, and you can look directly at that. You can also find all the information about active coverage, fees earned by platform, and then historical cover sales right in the Nexus tracker as well. But look out in the newsletter for a breakdown of the different platforms and the total active coverage across those platforms for each cover type. I just wanted to talk briefly about the recent announcement that some custodial yield products had been delisted. We've heard back from different members over the past few months with the recent events from Celsius and Hold-A-Knot halting withdrawals, and then some speculation that there might be some contagion-like event across custodians. Out of an abundance of caution, the following protocols were delisted. So BlockFi, Celsius, Hold-A-Knot, Inlock, Nexo, and YieldApp. So the criteria for what was delisted were that was platforms, custodial platforms that were primarily providing yield products to users. Some of the other custodians that we have listed in the DApp, like Binance and Gemini, may have some yield products, but primarily they have many other services, like offering an exchange and different programs and products within their platform. They're also very large and robust, and some of these are smaller. So the view is that these could potentially pose a significant risk, and our current pricing model can't reflect that risk. Once Nexus V2 goes live, we do have dynamic pricing in V2, so we can actually react to changes in risk in the market in a much more responsive way, and risk can be priced by the risk experts that are managing the staking pools in V2. With the current pricing model, it's if you have enough wNXM staked, you can achieve the lowest cost. And then, we're not really balancing out risk very well across some of these riskier platforms. So if you hold active cover for any of these custodians, you'll still be able to file claims if you should experience a loss, as outlined in custody cover wording. For those who held cover for Celsius and Hold-A-Knot when withdrawals were halted, you're still going to be able to file claims. People who have Celsius custody cover that would like to file claims if they experienced a loss can do so now. For those who held Hold-A-Knot coverage when withdrawals were first halted, you'll be able to file claims in November. I believe it's November 7th, but we'll make an announcement on that. Just going forward, no one will be able to buy custody cover for these platforms. I've also got a link to the announcement in the thread for today's call as well, if you'd like to read about a little bit more detail, but also happy to answer any questions about that. All right. I will move to the open forum section of the call. So if there's anything that I haven't covered, anything I haven't talked about, or any questions that you might have, feel free to ask now. It's an open forum, so anybody that has any questions or would like to speak on anything, please let me know, and the floor is yours. Okay. I'm not seeing any questions coming through in the community calls text channel, and I haven't heard any questions so far. So I can wrap things up on the call. I just wanted to say thank you to everybody for joining us. We hold these every week, and I always enjoy providing updates to the community. I hope that everybody has a great rest of their day and a wonderful rest of their week, and we'll see you on the call next week.